Yo, is this even working? What is going on, man? I am so confused. Hold up. There's only one way to check, and it's through this phone, straight up. Just give me a quick second to figure this out. Ah, okay. There we go. All right, my bad about that unprofessionalism. All right, what is going on, Z community? It's your boy, TAMER Azizz, and today you're watching this because you want to see how I'm about to pick these stocks in live action. So, as you can see what I got over here on the screen, let's just dive right into it. I have a couple of stocks already listed with a couple of ETFs as well. Now, because this is going to be mainly based around stock picking, I just want to go through the ETFs super quickly just to get them out of the way. So let's actually look at what we have over here. And while I'm pulling that up, okay. And before I actually dive into it, I don't know if you guys have heard, but we actually released our first ever podcast called the Personal Finance in Canada Show, or as you can call it, the PFC Show. We actually released our 5th episode today, so if you haven't checked that out, be sure you are, because if you aren't, you're slacking. Anyhow, let's actually look into this checklist that we've formulated. And as again, let's just get rid of the ETFs. So the ETFs, I have 3 of them that I've been eyeing down. EGPT, HMMJ, and VFV. I know these are just some random things that you see on the screen, but let me explain each one very briefly. EGPT is an ETF that is for an emerging market, specifically within Egypt. Now, the reason why I wanted to look into this is because, number one, it's pretty good to have at least a small portion of your portfolio invested within an emerging market. That is the main reason. HMMJ is basically the Horizons ETF for anything within the cannabis industry. You got your Afrias in there, you got your canopy growths, you got everything in there. And the way that I see it, I feel like there's a big potential in terms of where this can go within this year. Is this even working? Yo, my bad, guys. Just give me a quick second because I am super confused. My face is not showing. Okay, if my face is not moving, let me know in the chats. Other than that, I'm just gonna continue because realistically, I'm not trying to hold this up for a camera issue. Oh wait, never mind. I think I got it figured out. It's because of this guy. Get over here. All right, there we go. Now my face should be moving 24/7. If it's not, just let me know on the let me know in the comments. Anyways, back to what I was saying. VFV. VFV is the S&P 500 ETF that is within the Canadian dollars. It's made by Vanguard, and it's a staple to every single person's portfolio overall. Now, just to get these out of the way, when it comes down to decision criteria. Now, I've come up with decision criteria for both ETFs and stocks, and let's just go through them very briefly. For ETFs, there's only 3. The first one is, does it have 5 years of historical data? If it doesn't, take that away. And if it does, then that's where you could actually start taking it seriously. You look into its past 5 years of data, and then you can actually get an idea of if this ETF is a good idea to invest in or not. The second decision criteria that we've got over here is a MER between 0.25 and 0.75%. What is the MER, you ask? The MER is also known as the maintenance expense ratio, or you can either see it sometimes being listed as ER. So essentially what this is, it's an extra fee that actual investment firm will charge you extra for because they're the ones they're the ones maintaining that ETF. So why not charge you, right? Anyways, and then the last decision criteria when it comes down to ETFs is whether or not it has a good long-term performance. And it's kind of contingent on the 5 years of data, but this decision criteria factor is pretty self-explanatory. It's either you have a good long-term performance, chances are you're going to guarantee a longer-term performance for me. So that's why I'm going to go with that. If you guys want, I'm going to go straight to it right now and actually look into how that's going to be looking like for these three ETFs very briefly. Now, I wanted to actually introduce to you guys what I usually use when it looks when I wanted to introduce you guys to what I usually use to look into historical data for ETFs or stocks. This is actually called macro trends, and I'll see if it pulls up on the screen right now. Does it not? It has not popped up on the screen. Let me get that for you guys, because it's honestly a super dope platform. Oh, actually, there we go. Macro trends. So the way macro trends works is pretty self-explanatory. What you have to do is you have to look at this little search bar that you see right in front of you, and then you're just going to type in whatever you're trying to look for. For the first one, we said we were going to be looking at EGPT, was it? No results? Did I just... EGPT. Did macro trends just backfire on me? How could you? Weird. Okay, HMMJ. Nice. Super nice, super cool. And last but not least, VFV. Nice. Alright guys, well I guess this doesn't work. I guess macro trends doesn't work for ETFs. So let's try another resource, Yahoo Finance, because that's the only thing that we could really kind of rely on. Alright, we just pull up Yahoo Finance real quick. We get to searching up EGPT. Hopefully Yahoo Finance will actually show me some long-term history of it. Because usually the thing is with Yahoo Finance, and why I don't really like using it too much, is because they only show you the past 4 years of data, and it's not really sustainable in terms of the decision criteria that I've came up with. But as you can see, it's actually going for a 2.32% yield. Oh, see that expense ratio over there? 0.96%. Now, because of this, it already does not qualify for one of the factors in the decision criteria, so we could put that down over here as of no. A big fat no. Now let's actually look at the historical data, or just some sort of indication of its history. Let's just say this is the historical data thing, as you could kind of tell. And historical prices, sure, on a monthly basis. Maybe this will give me an idea. So you just got to look back at how... Okay, this thing goes back to 2010, which means it has more than 5 years of historical data. We can put that down over here as a yes. For a good long-term performance, we'll come back to that because it usually does take a longer time to do that. So let's look at the next ETF, which is HMMJ. The Horizons Marijuana Life Science Index. Awesome. Now this one is on the exact same thing as before. It starts, we're in 2021 obviously, but this only goes up to 2020. So that already does not make it a... Wait, let me just check that I got that right. Okay, yeah, so maximum basically. Oh, okay, it goes down to 2017. 2018, 2019, 2020, 2021, 2022. Yeah, I still have to do that. Don't even judge me. Portfolio's saying crazy, but my math is not saying much. So, whatever. It doesn't get to 5 years of data, so we're going to say a straight up no for that. But what's its MER, or its expense ratio? Let's look at the summary real quick. 0.75, so it's actually right on that little range that we were trying to look for. So we'll put a yes. Next up, VFV. Alright, awesome. Jeez, shout out to Go Track Media. I see that comment. I respect you still. I hope honestly, I really hope you're enjoying this so far. We're gonna dive in a lot more deeper into like actual analysis for stocks as well, like individual companies. So be sure that you're sticking into that, because I remember we were talking about that very briefly the last time we spoke. Anyways, the Vanguard S&P 500 index. So you can see expense ratio over here is super low at 0.08%. Now I know on the decision criteria over here it's between 0.25 and 0.75, but you know what? I'm a savage and it's looking super dandy, so I'm gonna say yes to that 100%. 5 years of data, chances are it does, but we want to just double check and make sure that we're not making any guesstimates over here. Historical prices and on a monthly basis. Bang. And as you can see, 2012. So it definitely hits that decision criteria as well. So we could put a nice little yes. Now, good long-term performance. How are we going to actually measure this? This is going to be interesting. Chart, conversations, profile, options, holdings, performance. I guess it's the performance. I'm not really liking the layout of this. Because as you can see over here, like, it tells you the trailing returns and the percentages and stuff like that, but it's not really something I can rely on. I'm more of a visual, like I have to look at a chart of data to actually understand what's going on. So let's just Google it. VFV.to historical returns or something. Let's see. Finance Yahoo, okay. Alright, well, we got the Vanguard website going on. Let's see what that's looking like. Dude, I guess I have no other choice but to say confirming the cookies. Dude, just let me in the website, man. Oh my god. Okay, awesome. We got some data to work with here. Oh, I think we scrolled a little bit too down. Okay. This, as you can see, VFV on the Vanguard website itself is going to show us essentially everything there needs to be. Performance. Awesome. There's the chart that I have been longing to find. But again, it tells me a little summary, kind of like Yahoo Finance. Monthly, quarterly, or annually. There we go. Something we could actually work with. Okay, so we're obviously in 2021, and there's no data for that yet. So we're going to have to look at 2019, 2020, 2018, 2017, and 2016. Now, I'm going to ask you guys, the people who are watching right now, and I want to see, do you guys think that this is a good long-term performance? So we're talking not only in just the 5-year, but we're talking in the long term, like from 2020 to 2013. Does this look like it's a good long-term performance? Yeah, I don't think so either. So we're gonna have to say it's a straight up no to VFV. And it's really unfortunate because it really does track the S&P 500, which has been going nothing but up recently. So let's just say not a really good long-term performance. Sorry, Vanguard. The net asset value, the market price. Yeah, that's pretty fair. Cool. Let's look into EGPT, which is by Vanek, if I'm not mistaken. EGPT, past performance, I guess. Yeah, Vanek it is. That's a little bit too broad. There we go. Now, if you guys are wondering as to why I specifically picked Egypt, number one, that's my background still. I'm a half Canadian, half Egyptian fellow. And I was just recently there for about 3 months. And just actually looking at the country, its demographics, its economics, and all of that type of thing, I think it has probably the biggest potential in terms of growth within Africa. Probably the top 5, if not the top 3. So that's why I'm looking into EGPT, but I don't know why Vanek is not trying to let me go into here. Like, dude, allow me. There we go. Okay. Yo, okay, guys, I filled this up for you like 17 times, and you're still bringing me... Yo, Canada, and I'm an individual investor, fam. I agree. Take all of my money, take all my information. What do you guys want me to say to that? Straight up. What do you guys want me to say to that? Yo, reload the page, my G. I don't know if you guys saw that, but this page basically flopped on a guy like me. This is the last chance, and if it brings me back to that page again, alright. Screw Vanek, you are not getting my visit ever again. Now you guys know not to go to vanek.com because it's probably going to mess around with you guys like this too. Historical performance. Okay, cool. Morningstar. Let's try Morningstar if they don't try to... Wait, dude, I'm so zooked. I completely forgot that ETF.com is a thing. Okay, guys, actually keep that website in mind. ETF.com is basically a database of all different types of ETFs where you can actually look at all of the details, all of the breakdowns, and it makes things super easy. I do not know why I did not come up with that before, or why I didn't prepare it before the live for this. Oh, I love these advertisements. All right, we got the overview. We're trying to look for performance, my dude. Okay, performance on a, let's say a 5-year level, and then let's try to look at a maximum level. But is it really gonna not show us the chart? That's nice. And yo, the thing is about ETF.com, like, it shows you literally the top 10 holdings, the top 10 sectors that they're invested in, and it's really dope. As you could see, like CIB, which is Commercial Bank of Egypt. You've got Telecom Egypt, which is super poppin'. You've got a bunch of different companies, and it breaks down everything for you over here. Now, I don't know why it's not showing me any charts. Maybe if we press total return chart, still not going to show me anything. So we have no other choice but to look at this table, because I'm not trying to waste your guys' time whatsoever. So as you can see, in terms of performance, over the past year, wow, 12.03%, not bad. And then you look at the 3-year return, negative 14.05. In the past 5 years, negative 7.88. And in the past 10 years, negative 0.66. I think you guys know what that means. We're going to have to put a strong no for EGPT. And last but not least, let's actually look into HMMJ, which is the Horizons. So we're going to just type in HMMJ and Horizons performance. Jeez, I see you, Aladdin Amira. A big shout out to you. You're a real one for tuning into this live stream. I honestly hope you're also enjoying this this live and you're getting some value off of this. Maybe for some potential portfolio activity sometime soon. So yeah, we got HMMJ over here with the past performance. Okay. Interesting. So over the past year, HMMJ's actually given back 114%. In the past 3 years, it's given negative 3.78%. But because there's not enough information to pull up for 5-year or 10 years, there's really nothing there. But for 2021 up to right now, so far, it's 55.65%. I'll be completely honest with you guys in terms of my decision criteria for ETFs specifically. If it doesn't show me any long terms, it's not catching it. So we're going to have to say a big no for HMMJ as well. So based off of this right over here, because there are only 3 different decision criterias, if an ETF doesn't fit all 3 for me, then I'm just not going to go with it. So sorry EGPT, sorry HMMJ, and sorry VFV, but y'all are catching the boat. Take a big red one on that one. Now, let's actually discuss what we were trying to talk about here. Individual companies. Now, when it comes down to individual companies, this is where things get a little bit, I wouldn't say complicated, but there's a lot of research that has to actually go behind it. Now, as you guys can actually see over here on the top in row number 1, I've listed a bunch of different decision criteria when it comes down to analyzing stocks. Now, we've got the PE ratio. I'm looking for something that has a PE ratio of less than 20. I'm also looking for an average PDE ratio over the past 1 year that is also under 20. And over the past 10 years, I'm looking for something that is below 25 in terms of, because I got this written down over here, but here, just give me a quick second to adjust these little windows I got going on. Je suis très désolé. Hold up, guys. just trying to navigate this little window. Because I recently got these two screens on my setup, and trying to navigate through this all has just been a mission still. Hold up, I'm almost there. We're gonna fit that, and awesome. Yeah, so basically this new setup has basically two different monitors, and yeah, it's a cute little setup, but navigating it is pretty complex. Hold up on this. Boom. I'm just gonna adjust this for you guys so you guys can actually see what's going on. Okay, dope. Alright, so back to my decision criteria. I'm looking for something that has a PE ratio right now of under 20, an average under 20 over the past 12 months. Over the past 10 years, I'm looking for something below 25. And where is it in terms of comparison, or in terms of comparing it with its competitors? I'm also looking for something that has a dividend growth of more than 10 years. If it's been raising its dividend or growing its dividend for the past 20 years, that's a big plus. It'll be like an automatic, like, yo, you're automatically in here. Revenue growth. Revenue growth is a big one. There's a big factor in terms of actually analyzing companies. You got to make sure that they're growing their revenue consistently over the past 10 years. This could even be like a 0.1% increase or a 1% increase. At the end of the day, this revenue increase or revenue growth is key. Next one is EPS growth of 10% per year pre-tax over the past 10 years. Now, what EPS is, it's also known as the earnings per share. Basically tells you how much a company has actually profited within either the year or the actual quarter itself. And then after that, we've got the... Honestly, these two are basically the exact same. It's just one is telling you that the earnings per share growth is pre-tax, and then the other one is after the company has been taxed. We're also going to be looking for how many sharp increases and decreases that have happened to the EPS. EPS growth over the past 4 quarters. Current ratio of higher than 2. If you guys have any questions in terms of what these things all mean, just let me know in the comments and I'll clarify them there. But I just want to make sure that we actually get through the live session and my camera battery doesn't die. I'm also looking for a PB ratio less than 1.5. PE times PB equaling less than 22.5. And last but not least, there shouldn't be any shareholders within the company that are holding 60% or more of the shares. That's a big red flag, and you got to make sure that we watch out for this. Now, as you can see, I already have a couple of stocks over here, but we're trying to add a couple of more so that we can narrow it down to a good looking company. What I have right now is Oracle, Verizon, Kimberly-Clark, Clorox, Campbell, and Air Canada. I'm gonna be completely honest with you, I'm taking Air Canada out of the mix because if you've been seeing Air Canada, you'll know why I did that. But speaking of that, now we're actually going to try to find different stocks. How am I going to do this? We're going to do this by actually using a stock screener. The specific stock screener that I use is called Finviz. Now, Finviz is an awesome stock screener. It gives you either the descriptive, the fundamentals, or technicals, and you could actually search any stocks within the market using this. Now, let's look at the first one that we've got over here, which is the fundamentals. Now, remember what I said before. The first factor that we're looking at is a current PE ratio. So a PE ratio that's going on right now, which is less than 20. So first thing we're going to do is go to the PE ratio over here, and we're going to look for under 20. Pretty straightforward, right? As you can see, without this under 20, we literally went from a total of 8,037 stocks to, come on, allow me to, okay, there we go, under 20. So we went from 8,000 stocks all the way to 1,054. We've already narrowed down our choices big time, which is a good thing. It's not a bad thing. What's the next factor we're going to look at? So an average PE over 1 year and an average PE over 10 years. We'll skip that for now because Finviz doesn't really give you the option to search for that.
Same thing applies for dividend growth. So the next thing we're going to actually look at consistent revenue growth over the past 10 years. Now, FinViz, they don't really allow you to look at this. They allow you to look more at the past 5 years, which is something that I still don't mind, because what you should really be aiming for is a 10% revenue growth every single year, especially over a 10-year average. Then it should be 10%. So thinking about that in that specific logic, then we would try to look for revenue growth that's either between 5% or 10%. So we're going to search that up over in FinViz. Let's just press positive low. So it narrows our search down from 1,000 companies to 382 companies. Still good, but we want to narrow it down further. What's the next factor? The next factor is EPS growth of 6 to 7% post-tax or 10% pre-tax. So we're going to look at EPS growth over the past 5 years, and we'll make it positive low. Why not? So now we go from 382 companies to 127 companies. We're getting somewhere. The next up, number of sharp increases of EPS. No, we're not going to look at that because it doesn't allow you to look at that right now. This is more for when we go in depth in actual research of the company. Earnings growth over the past 4 quarters. Is that something we could look into? Yeah, the advertisement was not something I was looking into. EPS growth this year. You know what? I don't want to guess anything, so let's skip over to the next factor. A current ratio of higher than 2. Current ratio is basically just the current assets over the current liabilities. Essentially what this is telling you is how much, how do I explain this? How do I explain this? Okay. Basically, this current ratio is going to tell you if something really bad happens or the company gets into a lot of debt, does the company have enough assets or investments, or does it have enough value to be able to actually pay off that debt sustainably? That's basically what the current ratio is telling you. And with having a current ratio of higher than 2, it's basically telling you that the company can actually deal with its debt without any major issues. This is really big, especially with debt being such a prevalent thing within businesses and companies overall. So we're going to go over to current ratio and click over to. That brings us down from 127 stocks to 11. I'll be honest with you, I was looking for somewhere within the 15 range, but I really don't mind putting these 11 into the watch list. So let's quickly go through them. We've got IMOS. Oh wow, Oracle's in here. That's perfect. Cool. Let's add these in and see where we get. I feel like we might even have to split this live session into 2 bits, but let's see where we get at. IMOS. What else did we get? Yeah, FinViz. Yo, we could get back to you later. MLI KTCC. MLI KTCC. HWKN. HWKN, DIT, RJR, MEI, Vivo, and MNDO. Why is this bold? MNDO and EBF. Yeah, okay. Awesome. Okay, so how many stocks do we have right now? We've got 3, 6, 9, 12, 15. You know what? I feel like narrowing it down from 15 to my target of 5 to 6 stocks will be doable. But you know what? Let's try to add another 5 stocks into there. What are we going to do next? So as you guys can see, one of the things that made our list super narrow was either the sales growth over the past 5 years or the EPS growth over the past 5 years. So what we're going to do is we're going to actually work backwards and then use another factor instead. It might actually give us some more insight or some more companies that we could actually add into here. So let's reset the, I'm not going to say EPS growth, I'm going to say the sales growth to any. This increases it from 11 stocks to now, how many? To 24 stocks. Still something we want to narrow it down a little bit further. So the next thing that we could look at is move over and Boom. A PB ratio less than 1.5. With this many stocks, I don't think it's going to be possible, but let's try to see what we got. Alright, so nothing. Okay, let's just prick under 2. So from 24 stocks to the same 11. Actually, we see some new ones over here popping up. CRWS. So we'll add CRWS. Bro, I don't know why all this is bolding out. CRWS. TRQ. We already got DIT in there. DVD? What do you mean, broski? RIP to DVDs. DVDs. Hello. We have NPK. NPK. WLKP. What a mouthful. And last but not least, loan. Oh, guess what sector that's in, right? Alright, now we've got about 22 stocks. I think that's fair. Let's actually get down to breaking these stocks down. Alright, so Finviz, thanks for backing us up, but we won't be needing you anymore. And now that we're back with our watch list, this is what we're going to do. This is the actual game plan. This is where things get down and dirty, if you guys want to say that. So I'll increase the screen size again for you guys. And I'll make sure that you guys can actually see my beautiful little face. Give me a second. Hold up, hold up, hold up, hold up. Honestly. Whatever. Okay. Sorry guys, it's just okay, there we go. There was just this little box that was like auto-focusing on me, but yeah. Oh man. Oh no. Guys, my camera battery is literally on the lowest level. Oh, this is a tragedy. Sticky situation that I'm put in right now. Okay, you know what? I'll tell you guys something. We got our stocks. We got our ETFs. I was actually thinking of doing everything today, but because I want you guys to actually see what's going to be happening next, we're actually going to continue this live session on... Stay tuned, and I'll release the next time that we're actually going to continue this and break everything down. But you guys have actually seen stock screeners. You guys have seen macro trends, which didn't really work for ETFs, but it will work for stocks. And you guys have also seen a little bit of the thought process as to how to actually begin collecting your watch list. If you guys want to stay in tuned, because I don't have that feature on YouTube where you can update community updates and all that type of stuff, make sure that you're actually following me on Azizz.finance on Instagram or TikTok. This is where I actually make the most amount of updates so that you guys are well informed as to when the next live session is going to be. I want to make sure that I break this down with you guys because not only do I have these factors, I have other factors that will be really valuable for you. But nonetheless, I want to thank you guys for actually tuning in. This is your boy, Tamer Azizz, signing out. Peace.